but I see Bitcoin really being digital gold in people's wallet. And in parts of the world where the inflation's really high, it feels essential.
Expect Treasury to pay a little more attention to stable coins and financial stability surrounding those. Crypto-specific bills, some updates on essential.
Hey everyone, and welcome back to Wealthy Value. Today's video is sponsored by Metabillionaire, an NFT collection that is gearing up to become the next big blue chip NFT project. Metabillionaire is the first ever entrepreneur-based NFT. By becoming an owner, you will get access to a private mastermind of elite entrepreneurs from all backgrounds, such as real estate, art, e-commerce, startup, stocks, and crypto. You will be introduced to exclusive opportunities such as IDOs, ICOs, as well as events in cities like Dubai, Los Angeles, and New York. Entry will be free for all holders. You will also enter the metaverse with a field on Sandbox. Every 3 months, the team will be investing $50,000 to $500 USD in 2 of the holders' projects. As a community member, you will choose the projects to invest in, and you will have the chance to invest in those projects yourself. The project will also have a dedicated charity fund, consisting of $150,000 USD plus a part of the royalties, to build schools and water wells in Africa. You can buy a Metabillionaire from OpenSea at the link in the description, but act fast. The floor price is rising, and some billionaires are already selling for 6 Ethereum, around $24,000. And now, back to our video.
Yes, I did not sell a Bitcoin, a fraction of a Bitcoin. And like we talked last time, you always start with a small allocation of 1 or 5 or 10%, depending on your risk appetite. But then, yeah, after a couple of years with these growth rates in the past, at least, that small exposure turns out to be indeed 50+% of your portfolio, and it's still 50+. I have that same portfolio theory thought in my mind that you rotate back to your initial mandate, and especially in an institutional setting, of course, you have a mandate that you can have X% in some asset and Y% in another asset. If you start with 10% Bitcoin and that grows to like 80% Bitcoin because it doubles and doubles and doubles again, then you have to rotate out of that asset and into another asset. And I might say in an institutional setting, you have to do that. Personally, I don't have that strict mandate, of course, for my own money, but it would be wise to have some kind of protection built in. Okay, I want to have 25% in real estate, 25% in gold, 25% in stocks, and 25% in Bitcoin. Yeah, well, I rebalance that yearly or quarterly or whatever, and that would be like conservative. I think that would be not a bad approach at all. On the other hand, I must say, it's always difficult, even for institutional investors, but they're bound to their mandates. I am not personally. It's always difficult to sell the fastest horse. Bitcoin is not unfailable. It's not like, so it can fail, and of course, and as long as the risk return, and that's also the reason why I don't rebalance or rotate out of the asset into some other asset, because the question then is, what asset has a better risk return profile? So the risk return profile of Bitcoin is exceptionally well, and I guess better than any other asset I see right now, and I have ever seen, because the Sharpe ratio of Bitcoin is larger than 1. The average yearly return is higher than 150%, 160, 180, somewhere about that. And the volatility historically measured in standard deviation of returns, or looking at option prices, implied volatility, the risk is about 80%. So we have 150% return versus 80% volatility or risk, which is a Sharpe ratio of larger than 1. And there are not so many assets that have a Sharpe ratio larger than 1. So that is one very specific thing I look at and that gives me a hard time looking for other alternative investments that, well, I could rotate into when Bitcoin goes up. The risk will be high, is high, and will probably be high, but the return could go down. For example, this year, if we look at this year, it's only 66%. And if I say that, I almost have to laugh. Yeah. 66 is not bad, but with 80% volatility, that makes a Sharpe ratio of lower than 1. And if you would have 1 or 2 or maybe 3 years of lower risk return or risk adjusted returns, that would give some thoughts, and that would probably make other assets more attractive. First of all, I'm one of the few that indeed thinks that there will be a next bear market, a crash, like we've seen a couple times before, because there's a lot of people right now saying that we're done with the 4-year cycle and we will not have that kind of volatility and that kind of deep bear markets anymore. I think we will have those bear markets. You can see it in the option prices. It's priced in at 100% volatility. When the China banned it, the mining, we went down 50% or more. So we almost had it. we had a crash of 50% right there. So that tells me that 80%, when something really big happens, is not out of the question yet. So yeah, I think we will have to go up quite a bit, at least to make the stock to flow model values of 100,000 and 288,000. But after that, we'll go down 80% again. I'm not looking forward to that, to be honest. Nobody probably is, but I guess that's part of the deal, and it's also part of the greed and fear that's in investors, and that people won't change. There will be FOMO if we, for example, hit the 100,000 level a couple of months from now, or maybe this month, according to the stock to flow model. People will FOMO in, and it will go up. And then after that, something horrible happens, another ban, another China ban or India ban or something, and everybody's scared again, and the fear sets in. So I guess that fear and greed is never going away in Bitcoin. And I don't have a crystal ball either, but I do have my stock to flow model, which
yes, you do.
I won't say it comes pretty close, but well, it gives some fundamental guidance as where it could go. And I see investors right now have a very limited set of assets that they could store wealth in, and it's real estate for sure. That's the biggest market, $100 trillion market. Of course, it's stocks and bonds, but in the commodity space, and it's gold, and it's Bitcoin to a smaller extent, because it's really a small asset with a $1 trillion market value. But some forward thinking or innovative investors might be okay to put a couple million or maybe even more into Bitcoin, but not like 10 million or 100 million, and where they would be perfectly okay to put 10 million in gold or 100 million in real estate. And I guess that will change in the next 10 years, because Bitcoin will be more accepted, more by countries, and more legally, regulatorily secure, and the scarcity will grow, right? So Bitcoin is now a little bit less, about as scarce as gold, and investors have to get used to that. Bitcoin is the perfect store of value once it has the legal clarity and the regulatory clarity that it deserves, and maybe also loses its exotic and innovative aura, and becomes a more conservative and conventional asset, which takes time. Bitcoin will continue to compete with other stores of values like gold and real estate in particular, and gold is 10 trillion and real estate is $100 trillion market. So yes, I really do think that in the next 10 years, Bitcoin continues its historical path